All right, good morning, everybody. So since I ran into some trouble Sunday, we're going to take a look at the Forex Weekly Outlook. We're going to do it right now, and we're going to do it pretty rapidly. So first pair we're going to look at is the Great British Pound and the Japanese Yen. So last week you can see where we got that bout of volatility to the downside. This trend line that you see on my chart is coming from the same basic trend line that you got on the pound dollar the entire life of this asset. So that's what that trend line is. You can see on off log you haven't hit it, and on log you're nowhere near it. All right, but I mean, you have hit it off log, but you've only hit it once, whereas on the pound dollar you're actually trading just below it again. So here is that trend line. If I go into a daily chart, you can basically see how we traded above it. Right here was that break, big strong bullish day, and then basically you traded sideways to down, never getting a closure below that daily candle, this bullish daily candle. All right, once you get that on this day here, you got it, boom. This is indicative of this being a bull trap. Not only did you take out that bullish candle, but you also took out your lowest support in this section of price, this first leg consolidation, second leg to the upside. So that's a standard measured move in price. There was your support. Let's get rid of this line because that would have been possible support when you traded back down into it. You blasted right through it, closed down here. Then the next day you came up and tested it as support. Right there, you didn't get an exact perfect test, but that's close enough to be considered a test. And then you push down into support. This is your support over here. All right. Why is this support? Once again, because it was resistance. The last closing candle before the bulls take it out is resistance. So it would have been that candle. As you can see, it is just a little bit up above that close. So we traded down into it, and so far that is holding as support. So let's go back to the weekly. Good morning, Pepe. Mommy will be up in just a minute, pal. So right here, you can see this was last week's bearish movement. This is this week. So we traded down Sunday morning when we opened just for a brief moment, and then we traded to the upside. She's coming, man. Chill. My cat is complaining, very hungry. So right there, that was a test of that level. Now, I didn't notice it until yesterday as I was checking a lot of other stuff out. So we did not get all the way up there, as you can see on this hourly chart right here. So basically, I told people to keep an eye on that level. If you do get a push up into there, look for failure to happen for a possible short side entry. Now, if you come over here and look at this swing high right there, you can see that on this push up, you touched it, but you didn't take it out, right? Did not take it out. That was yesterday. So is that considered valid for a run on stops? Well, the spread puts it on this asset. This is Oanda's data feed, 2.4 pips above that line. So is that enough to run stops? Technically, it is. Absolutely. If people have their stop resting or just on that swing high, then yes, that run up with the spread would have been valid enough to take out stops. Generally, when we see a stop run, we want to see a further push and then a rejection. That would have also put you right up into this hourly order block or this hourly bearish ETH level, as well as that trend line. So you have not quite got the test. But what you did do yesterday is you traded up into this right here. Boom, boom, boom. And then you've rolled over. So I had a limit sell set right there when we traded up into it. This happened last night. I got triggered into the trade. My stop is setting right above that swing high right there. Target would be this down here, but we'll just use the wick as just in case you don't get a push all the way down into the candles open. This gets you situated so that way you have a target. Now, you might not even trade down to there as this big bullish candle, the midpoint is a lot higher, roughly around 152, spot 983. So you can absolutely find support there as well. I am still looking for a test of this level. This is probably just going to be a quick fake out move to the downside since we had so much bearish volatility last week. I'm expecting a lot of these things to pull back and pull back a little bit further. And also, I gotta say, yes, it looks bearish. We will be looking for bearish setups as the near-term trend is down. You have made a downtrend. You've taken out this swing over here, so you will be looking for downside setups. But a pullback into a better area higher would be a lot better of a spot to look for shorts for the long term. So that could turn into a swing trade per se. So we will keep an eye on this asset as we go on further into the week. So just, keep an eye on it. Another thing is on the longer term, guys, these things are still structured extremely bearish. You can see this push was so volatile. This is the daily, and it pushed you completely down almost to the oversold level just in 2 days. All right. So this is a reset on this indicator, which has given it a massive push to the downside. You can see that if it decides to become bullish again, it has a lot of room to go. All right, a lot of room to go. People are going to be noticing that bearish divergence. However, it played out right there. So is this point from this swing to over here divergence? Yes, it is. But those technically or sometimes typically don't really play out so much. It's the more near-term price that gets played out when it comes to divergence. And even if you do want to say that it is, then that move there basically played it out because you got a test of the 50 mark on the RSI. So that would be a good enough check of the bearish divergence to say, okay, it has played out. So where are your moving averages in conjunction with price? You can see you tested the 100 on a daily chart. This is the only place that I look at moving averages in RSI is on the daily chart. I don't care about where the 20 EMA is on the 5-minute chart. Doesn't matter to me. I only want to know where they are on the daily. So you can see that you have gotten a close below the 50. Yesterday put you back above the 50. Are people going to be looking to buy a 50 test? Yes, they will. Will I? No, I will not, because there is no price level for me there to even look for bullish entries. And besides, like I said, the momentum now is to the downside. So it would be up to the bulls to prove that they have regained control of this asset. So moving on, let's go over here and look at what we got on the euro dollar. So the euro dollar is inverse to the DXY. The DXY is a basket of currencies and it holds about 61% of that is in the euro, which is why they trade almost exactly inverse. They're not quite exact, but pretty close. So this is your big bullish explosion on the dollar. Also massive explosion to the downside on the euro. So we were looking for support checks at all these levels. And you can see that, boom, you sliced right through it. This is why I tell you guys, do not just blindly buy at these levels. Yes, oftentimes they do act as support. Here's your level. There's your test of support. There's your bullish move. So on a push back into it, price is oftentimes going to get a bounce, but it could be just a small bounce before sellers push it on down beyond that level. So you don't want to just sit there and buy it unless you have seen a willingness to trade away from it. And you never want to basically try to buy something that has that much momentum to the downside, as you are literally trying to catch a falling knife. So when you're making trading decisions, when you're looking for entries, you basically have to take all of this stuff into account. You can't just say, well, there's a Heath level, price is above it, so I'm looking to buy it, and then get stuffed out and then blow my inbox up asking me what to do. I've talked about it and talked about it and talked about it. You must see a reaction at that level before you can take an entry. So here we are on the hourly chart. There is that daily level. Did you get a bounce from it? Yes, you did. But look how small the bounce was. Was it a tradable bounce? Yeah, if you're a fantastic trader, you could have gotten a few pips out of that and then exited your position because you got stopped out if you didn't real quick. This bounce took 1, 2, 3, 4, 5, 6 hours, and then it was over with. No more bounce, right? So if you are trading these bounces, I do not suggest you do that, because look at the momentum coming into it, and then look at the momentum that went after it. You cannot step in front of that with a buy order, or you will get ran over. I'll show you basically. I can't really find an area of support on this. You would have to say that is it, since it's the last one. You did get a close beneath it, but immediately you shot back out of it. So coming back into the level, we will see if we get a bounce, right? You might not even trade down that far. So let's go look at the 4 hours. So it looks like you're trying to come into it now. This is your bullish push, close above resistance, right? So this shows a willingness to trade away from the area, even though it's a little bit of a willingness. It's not a big bounce, but still, nevertheless, here's your 4 hour resistance. There's your 4 hour break and close above 4 hour resistance. All right. If you're looking at 4 hour levels, you must keep an eye on them with the 4 hour chart. Same goes for the 8 hour. If you're looking at 8 hour levels, yes, you can check them out on a 5-minute chart, but make sure you understand that smaller time frames can trade through those levels, and so can the same time frame trade through the level. It's the retreat back through. That is when you're looking for your entries. This push lower, taking out support. You have not closed yet. This candle closes at 9 a.m. Eastern Standard Time. All right. If you are closing back above your old resistance right here, if this thing closes back above, then you may be able to look for bullish entry. Know that you are taking a counter trend trade, targeting your next area of resistance right there. That's where you would take your first scale out, 2/3 of your position. Then you move your position to break even. So I have not dropped any frames, but YouTube is still telling me that it is not receiving enough info. So we will ignore that, as I've been doing this long enough to know. So yeah, we're going to keep an eye on this candle for the euro. I am not looking for bullish entries. I am not. Look at this. This is not bullish at all. When price is showing you one thing, just because you think another doesn't make it true, right? Everybody's experiencing this on Bitcoin right now. Everybody is still so bullish on it, but price is showing you that it is not bullish. That is not Heath saying that it is bearish. It is Bitcoin saying it is bearish. Here is Bitcoin. Yesterday, I tried to take a bounce play off of algo. After this move was put in, obviously that was stopped out. So that was not a good play. Why was I trying to take a bullish entry off of this obvious bearish chart? Because I'm an idiot. That's the only real answer I can give you. Never trade against the trend. Try to keep trades in the direction of the trend, as they will work out a lot better. So it does look like Bitcoin is pushing lower to take out that 28,157 level. Now, this is on Kraken's data feed. 28,157 is the low. If I go over here to Coinbase, you will see that that low is exactly 30K. There it is right there. Exactly 30K. Someone asked this yesterday in the Discord. Why is it that the prices are different? That is because the spot arbitrage market makers have not traded that edge out of this market yet. When you go to Forex, you will see the same thing. Different exchanges will have different prices for the same levels and vice versa, but it's much, much, much tighter on FX. Like, you will literally be so close that the deviation may be 1 or 2 pips at best. That's because the spot arbitrage market makers, they buy on one exchange and then they sell to another. That is why when people complain about market makers taking their stops out, it shows your ignorance of the market. It absolutely shows just how ignorant you are, because market makers do not care about you. Basically, the edge to arbitrage price out is you sell, or in this case, buy from this exchange at $31,000 or the other exchange, whichever one's lower, and then you immediately turn around and sell those Bitcoins back to the other exchange where Bitcoin is higher. They work out a deal with the exchanges, the market makers do, so that way they get a very small percentage of fees, because they are essentially, they're not physically doing it. They have bots and algorithms that do it. They are buying so much and selling on another exchange so fast that it's literally happening every split second. Every split second. This is why you are able to take a position long at any price you want. It is also why you are able to exit these things at any price you want, as long as it's got enough liquidity in it to where it is being spot arbitraged. You will more than likely be able to get out of your position, and it's because of market makers. All right, so we need to be thankful and happy that those guys exist. Otherwise, you would not be able to get out of some of your losing positions sometimes, unless there was someone on the other side willing to buy it from you. All right, so this is the low. Sorry on the rant. 28K on Kraken, 30K. It's the same wick. I don't care what the price is. This looks to be the target. All right, you have got a daily closure below daily support. This was your lowest daily support right there on that bearish candle. Right there. That candle is exactly the same on every single exchange. The only difference will be the price. All right. Here was your break yesterday. There was your test. And as you can see, you are having continuation off that test. Looks to me like this is the target. That doesn't mean you should get in a short trade right now because he said it looks like that's the target, because I have no clue if price will ever get there or not. Because if you look right here, boom, you can see that wick took out this wick. So now this wick is the next target. Didn't take it out yet. So price could just drop below that and turn around. I have no clue if it's going to go down there. I'm just simply saying that if it continues to go lower, that's the target. Once that target gets taken out, you can expect anything. Anything. You could get higher prices from there, lower prices from there. Nobody knows what's going to happen. But if I was short, that would be my target. That's where I would be exiting my position. And that also puts you very, very close to the yearly open. The yearly open is right over there. Right here is your yearly low, that wick low. So it's unfortunate, because if we do get down there, that means Bitcoin will have taken out the yearly low, which is disgusting. But it is what it is. That means you are red on the year. And so you guys need to position yourselves, and you need to be ready for anything. You need to be ready for it if it goes back up. You need to be ready for it if it goes back down. Are you going to be able to take max profits if it goes back up? Nope. Are you going to be able to save all your profits if it keeps going down? Nope. You're going to have to make a decision, a very painful one indeed. Do I take half my position? Do I take 2/3 of my position? Do I take any of my position? These are all decisions that you as an individual must make. We are not financial advisors, but just know there was your push, your bullish push, and it was a bull trap. We knew that it was a bull trap just as soon as you got this bearish close, taking out that bullish candle. This was your short side entry right there. And then so far it's been a fantastic one at that. So Bitcoin's heading lower. All cryptos heading lower. All of them look disgusting. Every single one of them's red on the day, except Algo. And give it time, it will be as well. All of them looking for that capitulation wick low. Compound has already taken it out. Balancer has already taken it out. So many of these things are just as bearish as they can be. As bearish as they can be. So get over here back on the old FX. Here's Aussie Yen. Took a short on this last week. I have exited that position completely. I am no longer in it. Here was the entry. It was right up here on this little whatever you want to call that thing up there. Basically, it was just testing the supply, seeing if there was any overhead supply, and you can see that there absolutely was. My entry was right in this section of price, right there. There was my stop, right above. So you can see it was like a 500-to-1 risk to reward. Was a fantastic trade, absolutely fantastic trade. And So I'm doing all right. But there's nothing to do on it right now. All right, right now we got to give this thing plenty of time to pull back. First level that I want to see it pull back to is 83.966. Yes, I understand that's way up there, but at the same time, as long as it's not closing daily candles up there, we would be looking for short side setups to the downside just for trend continuation. The dollar has made all this possible. That's the dollar's move to the upside is what's caused all this stuff to move to the downside. The dollar overall is still situated bearishly. All right, there are a couple trend lines you can take a look at. I have one trend line tacked from this high to this high, way up there. All right, and then this trend line that's coming from this swing back in June 30th, 2020, down to that swing high. You can see we're trading at it right now. So this is where I get a little bit, this is why I think that the dollar might still be bearish. All these things that have rolled over could possibly be a buying opportunity. So I am not going to be bullish on the dollar until we get at least above that trend line there, which pretty close puts you above that swing high. At that point, then you can say that something legitimately has changed, as that is a massive swing high on the overall structure. So that's what we're going to be waiting on. Is this a selling opportunity? It possibly is. Right now, it is possibly a selling opportunity. So let's go back over to the euro. So that way we can see how we would trade this. It's not that one. It is that one. All right, so I did this yesterday, I think, but it did not match up. So if you just take something right there, oh, never mind. It does match up. All right, so there's that trend line that is in play. You can see on this, it's not all the way down there yet. All right, there are no daily levels as to what stopped price unless it's saying that is. Looks like it is. Unfortunately, I don't like these old levels. Once price trades through it and then back through it again, in my opinion, they're over with and done, as there is probably something else that caught it on a smaller time frame. Just the midpoint of that breakout candle. So, well, I don't see anything. So we'll just leave it as that for now. We let price show us anyways. So here would be your Heath level to watch if you get a push down to that. As long as you're not, we will have to wait until 9:30 to see if we're pushing down into that. If you are, this is going to be a pretty big bearish candle. You definitely got to start seeing rejection, meaning it's unable to push below it. If you get a close back above this bearish candle's opening price right there, then this level will be considered holding as support, and you would be targeting that wick high up there. That would be your first scale out. With this wick, that's not going to give you a very, very great risk to reward. If you put your stop, let's just say it stops now and goes up just to there, gives you a 2-to-1, 2.28 to 1, targeting that. Then you take off 2/3 of your position, move your stop to break even, and see what happens. Right? If this is a buying opportunity on the dollar, you will be situated at the absolute best spot that you could be situated on the asset to go short. Same for this. You would be situated absolutely at the best spot for this to continue to go higher. I am not expecting that. I am just showing you where you could possibly look for a long right now, a 2-to-1 risk to reward. That's if this candle does not close below that. Would I take the trade if you push on down into here? Probably not, as that would be too late in the day for me. And chances are, if you do get this close below this level, you are coming down to there. At the very least, right? So I would not be shorting it either, as the short has already took place. Plus you got this close above resistance. So I would not be looking to take a short entry. All right, if you're looking for shorts, you must wait on one spot 1988 or up here at one spot 20961. These two levels here would be better to short Obviously, it gives you a better risk to reward back to the downside. It's possible that it continues from here and rolls over. Absolutely it is. So that's the euro. Let's go look at the pound real quick. I must have moved it, so we'll look at CAD yen. CAD yen was extremely bullish. CAD was extremely bullish due to oil. Oil is absolutely just moving straight up to the mountains, going straight to the moon. There's your pullback. This is the yen. So the yen did catch a lot of strength. This is why you got a massive push lower on most of your yen pairs. Aussie yen, New Zealand yen, CAD yen. Dollar yen? Nope, not on dollar yen because the dollar was extremely strong. See, there's another bullish entry on the dollar, but you see how it's pushing below the wicks? The trade was yesterday. The trade would have been yesterday. And it's still not doing much. You would be in profit, but it's still not doing much. So I'm probably not even going to keep looking at this asset, as the trade was down there and I missed it. So on CAD yen, you're looking for the same thing. You're just going to leave it be until it finds an area of support or resistance. First area to watch would be 89.506. And this would be your next area to watch. 89.755. Just those bearish candles opening prices. Now it'd give you a couple areas to watch on the chart. I have 90.029 on there as well, and the ETH level at 90.212 all the way back up there. So any one of those areas could offer up resistance. Once again, you will wait on rejection. You will let price show you if indeed it is going to treat it as resistance. US oil straight up still. Is there anything to do on this? No. You are testing weekly resistance. We drew this in last week. There you are. Boom. I said that's the only thing I can see it reaching for at the moment. You got that this week, yesterday, right? There it is. Boom, yesterday. So now you will wait to see if you get a takeout out of support or take out support. Let's get these drawings off so we can show you where is support. Right there, support 7105. If this thing trades down into it and holds support, I'm not going to take that entry, but if you want to, you have to decide that for yourself. Next bearish place is down there at $70 even, and then you get the point. Each subsequent bearish candle thereafter possibly hold as support if you're looking to go long this asset. It is extremely stretched out. Extremely stretched out. Here's divergence that I'm talking about usually. Now this will change on the close of the day. On today's closure, this may be up or down depending on where the daily candle closes. But as of right now, you have what's starting to be bearish divergence. There's your high on the divergence indicator. There's your higher high on price. There's your lower high on the indicator. So if you are looking for that divergence to play out, it will be quick and brief. Probably down to the $71.05 level. This is not a bearish sign. This was a push up. You got a strong daily close above resistance. You are checking that level right now to see if it wants to hold out support. That's bullish. That's exactly what a bullish asset does. All right, and USD CAD, man, that was a fantastic trade. We were looking for that to break out with the dollar. So much conglomerated junk right there. There's your break. There's your retest. That's your entry. Happens over and over and over in these markets, man. I know what I'm talking about. Here's your break. Boom, right there, this candle. That takes you out above that resistance right there. Straight up, this candle opens, pushes down into, boom. Those are the setups you're looking for, guys. That is what constitutes a high probable setup. Did you know you were looking for bullish entries? Yes. How? Because you broke resistance. That's your resistance. There's your daily close above it. Here's your next day trading into the ETH level. That's your entry. Stop below that wick low. That's all I do over and over and over again. Crushing it. Killing the market. Aussie CAD. Aussie CAD is looking extremely bearish. I'm expecting a bounce out of here. It was just trending down and down and down due to that Aussie or that Canadian strength. Aussie was weak. Aussie's been weak for a long time. It's been weaker than against the dollar than euro and pound. It was just basically trading sideways. So just a little bit of CAD weakness comes in, and that's all you got out of it. Just that right there. And then now it's heading back lower. So we will see what happens. I'm not looking to take an entry on this asset, long or short. I am just watching it for now. For me to start looking for bullish entries, I want at least a daily close above 93.793. And then I'll possibly look for bullish entries. As this thing is stretched out to the downside, you should only be looking for sells, but not down here because it's extremely extended to the downside. And then Aussie or pound dollar. Let's go to, where's the other one? There we go. Pound dollar. So this level right up here, that's my quarterly, monthly, weekly area. You can see that we got a massive bearish push down beneath the area. There was a slight check of it and then continuation to the downside. I will keep my eyes on this level. As I said a long time in the making, if we keep closing above this, I'm going to be looking for bullish entries. If we get broke back down below it and we keep trading below it, then I'm going to be looking for bearish entries. The same thing that is on the pound Japanese yen, massive trend line, lifetime trend line. You can see on auto, you are above it already, but on log, boom, you are rejecting. Last quarter, you rejected it. This quarter so far, you're rejecting it again. So, what am I saying? Yeah, if this thing fails, man, big, massive move to the downside. It could be the trade of the year for 2021. Well, Bitcoin was the trade of the year, but you know what I'm saying. In FX, right there. We will see what happens. But I wouldn't be caring about daily closes on for a quarterly entry. I would only be caring about weekly closes. If we go to the weekly chart, you can see here, there's your strong weekly break. Big, strong break. So a check of that area is going to offer up possible resistance. Weekly closure above it, I put my big boy bull pants back on. Be looking for higher prices. We keep closing below it. We will look for this trend line to maintain what it has been doing its entire life, which is keeping the pound dollar down. Call that the man trend line because it's keeping the pound down. But it's doing it on the pound yen as well. So, and I am currently short on the pound yen. Let's look at what the chat has to say. Good morning, chat. Sorry about Sunday, guys. There's nothing I can do about it. It's not a money problem. It's a internet problem that can't be fixed with money. What's up, Heath? Good morning, everybody. Good morning, Flo. Leon says, okay, better now. What's better now, Leon? Oh, I guess you're maybe talking about being here. Well, good morning, my friend. Palo B, good morning. Good morning, CTMers and traders. So many good mornings, such positivity. Thank you guys so much. Cat on fire. Yeah, my cat was very hungry. You don't hear him anymore, do you? That's because he's getting fed. He's a happy cat. Good morning, good morning. Run stops, says the agile leader. Run stops. I guess you're asking, what does that mean? That means when price puts a move on an area that was clear resistance or support. So like, here is support on a weekly closing basis on the pound. So any long-term traders that got long on this push into that, they got long. So their stops is probably below there. As price moves forward, they will start to move their stops up. So anybody that got long from way down here probably put their stop underneath this. And then once you made this bullish push, they bring their stops up to under that. All right, just right there. And as you can see, this weekly candle ran those stops. Boom, right there. You even got a closure below. So all those stops were taken out. That's what I mean when I say a run on stops or a stop run or liquidity grab. All these things mean the exact same thing. A push below a swing low or a push below or above a swing high. This weekly, it's just Tuesday, so, but this range is very, very tiny in comparison to last week's range. So we could see choppy sideways price action, guys, for like 2-3 weeks. That was a massive move. You can see a weekly candle up, a weekly candle down, a weekly candle up before it finally breaks down. It's not going to happen more likely right now, but it can also. I mean, depending on how much bearish momentum's in the market, that could be a legitimate check of that trend line right there, and it's already being sold off. Well, you didn't test it. I don't know why it says you tested it on the weekly. There's the weekly. You see a wick above that trend line. Here's the daily. No wick above the trend line. What's up, TradingView? What is wrong with you? Anyways. No need complaining in something that you can't control. XAU USD says Solrak Ballins. Let's go look at it. I don't know why I didn't look at gold to begin with, but we will look at it now, my friend. Yep, same thing. Big dollar move. We were looking for a test of 1837. Obviously, that level got slaughtered. There it was right there. If we go look at a smaller time frame chart, you can see just how slaughtered that level got. Here was a push into it, and then boom. So you didn't even get a bounce from that one. This is going to be a spot to watch for a retest eventually. Price will trade slowly up and sideways. Get up to there. Possibly look for another short. We will see when it gets there. If you get back above it, then you're looking for bullish entries again. Alright? It's a very important level. Very important. We will see. It caught support here. A little bit below it. That's your resistance. That was your old resistance. This bullish candle right there. That's what caught price. This bullish candle. That's what caught price. So this was just a little bit of a small push up above yesterday's close. I don't know, right? I don't know. Expect sideways choppy price action for the next couple days. I did look at Bitcoin already, Solrak. I will go look at the US 30. Nice big bearish push. Got to break below support right there. Price already traded above it yesterday. This is an outside day, aka bullish engulfing. It is also known as a bullish reversal pattern. So you are looking for bullish entries probably on this asset today. Need a little bit lower of a close, but it's checking 4-hour support right now. Right there. Bullish candles offer up resistance, the close of them, no matter what time frame. You can clearly see that was it. It's being checked now for support. Right now it's holding. But this is a bearish engulfing on the 4-hour. AKA outside candle to the downside. It didn't take out the high, so you can't call it a bearish engulfing. But it is a very bearish candle. It's a trending candle and a very, very bearish one at that. So would I be looking for bullish entries with the overall trend down from here? Probably not. I would give this thing a little bit of time to chill out, like most of these markets. Good morning, guys and gals. Michelle Framley Randall says, good morning, Heath and Team Trade Talk. Good morning, Michelle. How are you? Good morning, Wes. Run DMC 5555. Look at the real money makers. Who's the real money makers? Me? Them? The people trading this asset? It's, people are calling for the market crash. This is not a market crash. Just not yet. Give it a minute to situate itself. Here's your weekly. So is this a test of resistance? It's possible. There's your weekly midpoint check. So I would probably be looking more for shorts than longs at this point, simply because there's your high. You tried to make another high and it was a lower high, and then boom. So I'm not looking to call this bearish yet, but I would probably be looking to short this roughly around this area, possibly. Well, no, I wouldn't. Not until we get at least a break and close below support, because right now it's bullish. Right now it has bullish momentum. Where will the sellers come back? We just don't know. But it's at a good spot right now. So this section of price is probably going to determine which way it goes for the next day or two. And then obviously a weekly closure above or back up around your last week's open. Your bearish move was already been thwarted and the bulls have already picked the market back up. Keep this in mind before starting to short US assets like the S&P 500, the NASDAQ, all this stuff. Keep in mind that the Fed has already told you that they're going to continue with their asset purchases. Alright? So before you get ultra bearish because your favorite YouTuber is calling for the sky to fall, make sure you keep that in mind. Make sure you keep that in mind. How to find strong support and resistance if the asset has multiple support and resistance shorter time frame. Go with your larger time frame. Nithiskumar. I don't know if I'm saying your name correctly. If I am not, I apologize. But yeah, you go with your daily. Look for your daily support. Support and resistance is the easiest thing in the world to find. People make it subjective and make it difficult by pulling out a chart like this and saying, well, you got to touch there and there, so here's support. That's the support. Yeah, no. That's just you picking a random spot on the chart and calling it support. Right now, support was this. That's your lowest bearish close. So the closing price is the support. There's your daily close below support, daily close back above support. So the next couple days, what you're going to be watching on this asset is 33,587. You get another daily close back down below that level, you're probably looking for short side setups targeting this wick right there. And resistance is always bullish closes. That is your resistance, 34,766. This bullish candle was resistance until that bullish candle closed above it. Same for this bullish candle. This bullish candle was resistance until this bullish candle closed above it. And that's the way your support is to the downside. This bearish candle was support until this bearish candle closed below it. Now this bearish candle was support until boom, now that one is. And that just keeps you a little bit tighter in with the near term trend, and in my opinion is the absolute best way to trade. What's up, Michael Turville? Good morning. He says Salah Al Tagbi. Good morning. Good morning. Good morning. Ed D says smash the like. If you wouldn't mind, I would really appreciate that, guys. Love your authenticity, says the Agile Leader. Thank you, my friend. Thank you very much. Amir Sadjay, good morning. What if a candle closes below a strong support in one chart and another chart it has closed above that? So I'm assuming you're talking about the same asset on two different exchanges. Go with the one that you have money on. Use the exchange and the data feed of which that is your broker. So like if you're using Binance, then don't worry about where Coinbase's support and resistance is. Use Binance's, because Binance is where your money's at. I hope that answers your question. I hope that's what you're asking. Spot arbitrage. Is this the reason why there's so much volatility, even though I have heard that there is some huge percentage of Bitcoin that is cold storage or lost forever? Well, there's a lot of volatility in Bitcoin right now because it made an astronomical climb to the upside. It was trading at $9,000 this time last year. And it hit highs of 60K. That's a lot of volatility. That brings in new buyers and new sellers. That's where the volatility comes from. Spot arbitrage is just a manner of buying on one exchange and selling to the other to make a fraction of a penny. But if you do it a million times in a day, then there's pretty good money to make there. But that is also what the market makers are doing. That's why it is ludicrous when people say, the market makers ran my stop, or the market makers made price do this, or the market makers made price do that. It shows their ignorance. If you have a YouTuber saying the market maker did this, the market maker did that, I would stop listening to that guy. He has no clue what he's talking about. Anyone using Bitfinex or is holding any tether? I don't hold, well, let me rephrase that. I am holding tether, but I'm holding it on KuCoin right now as I'm using that to trade the alts. But it's just a yearly low of this year. Yes, it is the yearly low of this year. Correct. Absolutely. But that's still huge, man. It's still huge. You were so bullish on the year, but you're almost bearish on the year. It's not good. Your yearly close for last year is all the way down to $3,800. 3800. Yep, you are correct. Dagger Rogers, oh, those decisions. Yes, those decisions can get you. Amir Sajay says, wait, I just lost it because the chat just glitched out. Oh, those decisions. I missed the bull trap, says Amir. Yep, we all did. Giles M. Fire. Thank you, my friend Giles. Thank you so much. Doge is green. That Doge, how dare it be green? Where'd you go, Dogesters? It is green on the year. Let's check it out on the day. Barely. There's your capitulation wick low. There's your target. That would have been a fantastic short entry. I did not get it. It happened while I was asleep. Oh, wait. Yeah. Yes, it did. It happened while I was asleep. That candle opened up at 8 p.m. Eastern Standard Time. Mr. Vizzle, do not show altcoins. I am bleeding too hard to see it. I have seen your call for a bounce on Bitcoin, was thinking to take a trade, but after 15 minutes, something told me, nah, do not follow, do not FOMO. Yeah, I'm not ever giving anybody trading advice on this channel. That is not what this channel is designed for. This channel is designed to teach you how to analyze charts the proper way. That's just it. Once you understand the fundamentals, once you understand the concepts, how the market works, i.e. the market makers aren't taking your stops, the market moves on buy orders and sell orders on the market orders coming in. The speed at which those orders come in dictates the price, which direction it goes. No one is in control of price. Otherwise, you see big bullish candles and then big red candles right after. Well, no one made money on that. No one made that happen, because if you think about it, the people that bought it to push it up are now losing money because the bearish candle went way below where they bought it. It's not people moving the markets as one, it's people moving the markets as a whole, as a collective. And then you figure out where actual support and resistance levels are, then you can make better trading decisions. Those are your decisions to make, not mine. Good morning, Monique. I think there's a lot of bleeding out there. Yes, there is. Look at this. That's the crypto watch list. Those are the pairs that most people want me to look at. And the only ones that are green on the day is Doge and Doge and Doge. And then NOIA is barely green. NOIA got destroyed. I'm so sorry if Kimberly is still in this thing. Absolutely wrecked. CTM ADL. Also took a short on pound yen this morning. Awesome. Good job, Adam Marshall. On that short, like I said, I hope you were here when I told you where my take profit is. There's a reason for that. Because this right here, you are fighting against bullish momentum. So look to take profits roughly around 152.994, around the midpoint of this bullish candle. So if you get a push down into there, take 2/3 of your position off, move your stop to break even. That way, if it continues to roll over and go down for all of 2021, you will be the person that sold at the highest possible spot. It's a fantastic place to be. And if it reverses and rips back in our faces, the trade was successful. It was a winning trade. Thank you for the live stream. Thank you for the knowledge shared. It is my pleasure, Martin. Heath bringing the fire. Thank you, Monique. What's up? What's up? What's up, everybody? Thanks for your great insights. You are welcome, Highlander Oza, or I can't even say your name, Highlander Aussie. Thank you for being here, my friend. Bitcoin. All right, we'll go look at Bitcoin real quick. What time is it? Oh, we got 15 minutes. All right, Bitcoin getting clobbered, man. Let me go get some levels for you real quick so we can get rid of that. We can get rid of that. And another thing, guys, I mean, this is just my preference. Obviously, you can do whatever you want, but I like to just keep a couple lines on my chart. Obviously, it looks a lot nicer and cleaner. Makes it a little bit easier to say, hey, what was this level? And also, if you're very, very new at TradingView, if you click on the line, it'll bring up this options panel here. Click on settings, go into text, and you can write what it is, like wick low. And then I have it to where it comes up on the top right of the line. You can also change that in settings right here, text alignment, top right. You can change it to bottom left, in the center, up or down, but it's a fantastic little thing. So I know this right here is the ultimate target. Oh, that's not the right way to spell it. So that's the target, right? So this helps if I go into smaller time frame charts. I'm not like, what was this line again? What was this line again? It helps you is all. Just a little hint. This is daily support. So that's what you're trading in right now. You're looking to take out that wick. And then ultimately, if we start getting daily closures below this wick, man, this is your target. So today's a very important day for Bitcoin. Does it close down here? Does it just put a run on those stops and then close bullish? Even if it closes bullish, I'm not going to look for bullish entries. You got to get above all this stuff. You got to get above this stuff. You went up to try to take out the high of that candle and you couldn't. So now price is looking to take out the low of it. Unfortunately, this means more sellers than buyers, or faster sellers than buyers. The sellers are in control. Let's just say that. Still on log? Yeah, it doesn't really matter to me. I mean, because the levels never change. Whether you're on log or not, the price is the price. And it's always the price. But thanks for letting me know. I'm just reading the chat. Following your investment strategy, one would have been looking for longs rather than shorts in the BTC bull trap. Once the daily close, yeah, basically, unless you waited on this to test support, you don't just blindly buy. So, not really. This is the resistance right here that you got to get above, man. This one. All of these are nice. But this is your resistance. This resistance holds the key to the candy factory. The candy factory is this big bearish range candles high. You got to get above that. So did I get long there? No. I got long yesterday on KuCoin trying to take a bounce down there. But the way to stop from that happening is to wait. To wait. Simply wait. Right? How do you do that? This bull candle right there, you know you do not want to see the low of that candle taken out. Otherwise, it's a trap. It's a trap. So how do you do that? You have to wait. On this daily candle right here, if you've seen a bounce on the push back lower to the line again, should have been your indication to exit. As it's not going higher, it's going lower. And then obviously the daily close. So, I mean, technically, yeah, you would have been looking for longs all the way down to here, right? That was a push below, break below, close below. So then this was your next one. But even when I did the live stream, we were on this day right here. I said, do not take it long yet until it gives you confirmation. You need few days, multiple days, testing the level, and then you need bullish price action. You got exactly the opposite. The daily pushed lower. So, I mean, one can see where you can get misconstrued, but we are always looking for bullishness on this. So that was this first, that second, third. I mean, you had three things right there telling you you're not looking for longs. You can use the narrative that the market's showing you each and every day. You get a whole new day's worth of data to help you with your decisions. But yeah, technically you're right. You don't have to, and it's not an investment strategy. I'm not teaching you an investment strategy. I'm teaching you how to find support, resistance, and ways that I trade it. So, Heath, why are hard assets like gold, BT, silver settling off? I thought because the dollar's going up, Pedram. That's why. The dollar is going up. The Fed is still pumping up soft assets. So this is the thing that people don't understand about the US dollar. It is the world reserve currency. So it can be a risk off asset and it can be a risk on asset. Usually when there's any fear and panic into the market, you will see a run to the dollar. A lot of firms and institutions and stuff bailing out of their S&P 500 indexes and all their NASDAQ indexes, Bitcoin, gold, all that stuff, and they go straight to the dollar. Boom. This is why you get massive explosions of price to the upside. Now, once a few days goes by and everything settles down, once they realize that the Fed is still going to continue to pump crack into the crackhead economy's arm, they're going to probably exit their positions on dollar and go right back to the other assets. If they don't, if this thing keeps going up, then the market is telling you something. The market is literally saying, investors are still piling into the dollar. Why? And that would be a question that you will have to look for yourself, right? But that's generally what happens. And also, like, so when there's risk on, the dollar's going down. But there's been several times where there was risk on, massive risk on, before this liquidity crisis right here, right? This looks like risk off, but it's not. If you look at the S&P 500 during the same time, the dollar was going up with the S&P 500 with a lot of other things. So it was a risk on asset as well as a risk off asset. Then we had a liquidity crisis in March for the untold virus of untold origins. There it goes, straight down and back up, stopping out both sides of the market, essentially draining liquidity from both sides of the market. Once you got that, there was your impulse leg to the downside. Then you were only looking for bearish entries on the dollar. And here we are, 2021. So it's in a critical area. Are we going to continue to go up or are we going to head lower? Well, here are two technical levels to watch, 92.45 and 92.163. Get a daily close above those, and you're looking for these up here, and then ultimately that wick high. This was a daily break above structure. That structure here was your bearish engulfing to the downside. Not quite bearish engulfing, but there's your rejection back out of. So are you looking for a support test of this area? Yes, you can. Yes, you can. But you're not just going to buy when the dollar gets down there. You're going to wait. You're going to let the dollar show you on an 8-hour or a daily time frame that this level is indeed holding price. Then you will look for bullish entries. You get a blast right back down through there. You're going to be looking for pushes up into price. You're going to stick with the overall trend and look for short side setups. Where you do your entries, how you do your entries, and why you do your entries are all going to be up to you guys, right? I'm teaching you how to technically analyze the charts the correct way. The best channel on YouTube for learning how to technically analyze candlesticks and what they mean is right here. Entries, exits, all that stuff. I tell you what I do, and you can follow that or make up your own. Take care of Tether. Check Wiki about it. I think there's a chance they stop buying back tokens. Fear will probably send down all crypto. Tether is a risky thing anyways, my friend, because they just randomly make new coins. It's supposed to be backed by the dollar, so I guess Tether figures, well, if the USD is allowed to print unknown amounts of money, we will do the same thing. So yeah, I mean, technically, if you want to look at all the conspiracy theories out there, the whole crypto sphere, the whole world can come crashing down, and it's all because of Tether. So this is why me and Jordan and most people say only invest with an amount of money you don't mind losing, because yes, it can all come crashing down tomorrow. If the Fed decides, or if the federal government decides they want to do an investigation on Tether, you're going to see massive crashes. And all of it. Tether has propped up the whole crypto market. So if it crashes, only invest with an amount of money you do not care to lose. If you follow that principle right there, you will be fine for the rest of your life. Oh, sorry, I did not see your super chat, my friend. I sold Euro Yen at $1 lot at 137.30. What should I do? Sold Euro Yen. Let's go look at Euro Yen. I don't know what you're asking me exactly. Let's get it up on Oanda. So you sold it at $1. Oh, you sold one lot at 137.30. 137.30. You're losing money. Where was your stop? Here, let me put this out there, right there. So that's where you took your selling entry. You took your selling entry at the lows right into support. This is exactly what retail traders do. I'm not harping on you, my friend. Look right here. There's a Heath level that I already had on the chart that I wasn't paying attention to, but let me show you real quick. Look at this. Boom. That line was already on the chart. There's your Heath level. Right there. So you sold into that. That should have been where you were taking profits. But you didn't, and you didn't have a stop loss. You should have had a stop loss at the very least above this candle's high, bro. That would have been a 1-to-1 risk to reward at best. This is why it's so vital that you guys start to look through my eyes, man. You do not sell lows, people. You need to exit that position, my friend. You are right now testing this as support. Right there. There's your bullish break. Took out this candle's opening price. Today you are testing that as support. Here you are. This is your entry. I know you're praying for this thing to come back down here. What is the narrative? What is price saying? Here's a check of support. That's support. Check. Check. Got a push higher. Closed red. Now you're checking it again. Will it break? It's possible. But I know one thing. At 9 o'clock, if this is not closed back below this level, you need to exit that position before it starts to really hurt you. One lot, you're getting creamed. Trade with an amount of money you don't mind losing. One lot, you took a one lot short. Now, hopefully you have a lot of money in the account. That's a pretty big loss. So the only thing I can say, my friend, is watch this price right here, 131.204. Here, I'll do you one better. Watch that bearish candle. If this 4-hour candle does not close below that, you need to exit that position. You need to take the loss. Because what price will be telling you is I went down, stopped out these guys and these guys right here, and now I'm going higher. Here's your resistance. There's your break above it. You're checking support. You're checking old support right now, my friend. And you've made new one. So 131,300, if this candle closes above it, you need to bounce or you're going to get hurt really bad. How do you avoid stop runs? Tough getting the setup right before. Yeah, all right, bravo. That's a good question. I'll probably have to end it with that question, unfortunately, because it's 6:30 and I have to get ready for the New York Open. It's impossible to know what's going to happen in the markets. All right, so like for instance, if you're looking for these two stops, if these two wicks to get ran, and then you're looking to get a bullish entry, then there's a chance you don't get the entry, because what if it doesn't run the stops and then it continues? So the best way to do that, I guess, would be to maybe place a limit buy down there and then a stop loss really close. So that way, if you're wrong and it continues to head lower, you get stopped out and you take a small loss, very small loss. That way you can wait for it to find support and then get in it again, possibly. But if you try to take, this is where you will have to harness your edge. I'm giving you a knife. It will be up to you to sharpen it, right? The knife I'm giving you is a very fantastic knife. It will help you carve a lot of profits out of this market, but it will be up to you to hone the edge for yourself the way you like it. All right, guys. So unfortunately, I got a little bit carried away with the rants. Hopefully I said something of value today. I have to always say thank you to all my channel members and Patreons. As you guys, I have so much respect for you for what you do. Thank you very much by helping me continue to do this. What we're going to be looking for today, carrying on, is we're going to watch the Japanese yen short. The pound yen short that I'm already in. We're going to watch the Euro USD to see if it finds support and starts to head higher. We're not going to take any bullish entries on it. I do not see any other asset that I absolutely love, but I got up a little bit late this morning, so unfortunately I didn't get to check all of the assets out. But I'll keep posting on Twitter. If I see something I like, I'll post it on Twitter, put it in both the chats and all that stuff. So make sure you guys trade safe, make sure you trade smart, and happy trading.